Hello everybody and welcome to this week ahead video covering the trading week for the 5th to the 9th of May 2019. Now our main focus points this week will be a possible trading opportunity on the Aussie dollar with the RBA meeting due later this week, and then a possible trading opportunity on the Kiwi dollar with the RBNZ also due later this week. The first focus point we'll discuss is the Aussie dollar. Now our current fundamental and sentiment bias on the Aussie dollar is bearish, and the reason for this bearish view is due to the dovish tilt made by the RBA at their previous meeting, which caused markets to fully price in a rate cut by the RBA in 2019. Also, at the previous meeting, the RBA explained that their criteria for a rate cut would be falling inflation as well as rising unemployment. Thus, CPI and employment numbers coming out of Australia would be very important for the fundamental bias for the Aussie dollar. Now, after this meeting, we had quarterly CPI numbers year over year come out with a miss of 1.3% versus consensus of 1.5 and a prior of 1.8, and the more important core measure or trimmed mean measure coming in at 1.6% versus expectations of 1.7 and a prior of 1.8. Now this drop meant that the annual inflation moved even further away from the RBA's 2 to 3% inflation target. That prompted the markets to intensify their pricing for a rate cut, and as a result, the market pricing at the moment implies around a 40% chance of a rate cut with this week's meeting. However, something to keep in mind though is that inflation falling only satisfies one of the RBA's criteria for easing, as the unemployment is still around the 5% range, with over 71,000 jobs created this year so far. So this means we can see either a rate cut or a dovish hold from the RBA this week, and as the market is divided about the decision, any outcome here should be very market moving. Now, we would expect a cut given only a 40% probability would put sustainable pressure on the Aussie dollar, and we would also expect that a dovish hold with a 60% probability at the moment to be supportive for the odd in the short term, depending on the extent of the tone from the RBA. Something to also keep in mind is the progress on the US-China trade front. Over the weekend, President Trump announced that the US will be raising their tariffs on Chinese products on Friday due to challenges with the current trade negotiations, and this should keep pressure on the odd in the short term, so keep that in mind for any odd trades that we want to take this week. Now the second point we'll discuss is the Kiwi dollar. Now our fundamental and sentiment bias on the Kiwi dollar is bearish at the moment. Now the reason for our view is based on the recent dovish tilt made by the RBNZ in their March meeting, where they explained that the balance of risks has shifted to the downside and that their next interest rate move is more likely to be a cut. At this meeting on March 26, Governor Orr explained that the weaker global economic outlook as well as reduced momentum in domestic spending was the main reasons for their dovish tilt towards a rate cut. Now following that meeting, we also had Q1 CPI for New Zealand, which came in much lower than expected at 1.5% versus consensus of 1.7 and a prior of 1.9. Currently, according to iOS, the markets are divided with a 50-50 odds between a dovish hold and a rate cut for the RBNZ this week. Now, with the market roughly undecided, guys, we could see big reactions from either a cut or a hold, with the cut putting pressure on the Kiwi dollar and a hold probably being more supportive in the short term, as there are a lot of participants that is expecting a cut this week. Now that we understand the fundamental reasons for why we have chosen these currencies to look at this week, we can move on to the charts and look at some of the technicals. Now guys, we'll follow the same technical approach for every chart we look at in order to ensure that we stay consistent in our methodology. Now in the case of a rate cut from the RBA, we could look to pair the Aussie dollar with something like the US dollar, which remains the most attractive bullish alternative compared to the other major currencies. Then if we see a rate cut by the RBNZ this week, we could also look to pair the Kiwi dollar with the US dollar for the same reasons mentioned above. So moving on to the charts and looking at the Aussie dollar, guys, on the daily chart, we can see that the pair has broken through this previous important support level close to the 70 handle. Now if we draw in our fib from the recent swing high to the recent swing low, we can see that we have a good confluence with the 38.2 fib as well as this previous support area, which has now acted as resistance as well. Now a pullback into this area would provide a good area to look for a possible sell on this pair, and a stop loss just above the recent swing might be a little bit tight for this pair. So the highest probability anchor for a stop loss would be above this daily swing, which is just above the 0.72 handle. And if price should reach this level, guys, we can safely assume that we were wrong about this trade idea. Now, in terms of a price target, if we do see a pullback into this area, guys, we can look to target something close to the 0.68 level or the 68.50 handle according to our 100% fib extension. Now, in terms of the Kiwi dollar, the pair has not really had any meaningful pullback that we can use as a more recent significant swing. So in this case, we could just simply draw in our fib from this recent daily swing high to this recent daily swing low, the high being close to that 0.69 level and the low being close to that 0.66. Now, ideally, we would like to see a pullback in the pair to take a short entry. And if we just have a look at the charts, we can see that we do have confluence with that 38.2 fib as well as that 0.67 handle. A stop loss just above this smaller swing point, which is just above the 0.68, looks like a good place to anchor our stop. And in terms of a target, we can see that the 100% fib extension gives us a target close to that 63.50 level. But given that this swing low just above the 64 is the only swing low for some time, it might be best to target that area just above that 64 level in case we have a bounce from that level upwards. Guys, and that brings us to the end of our week ahead video for this week. These week ahead videos are designed to help you get into the mindset of thinking like a professional trader. And as such, it's important to realize that we don't need to fear the red risk events in the markets like the RBA or the RBNZ policy decisions this week, as they can be some of the best ways to trade the Forex markets. Please also remember that both these trade ideas are dependent on incoming data and sentiment can change very quickly, so make sure to pay close attention to that market moving news as it comes through on your news squawk on a daily basis. We wish every one of you a profitable trading week ahead. Cheers.